Good morning, welcome to Bitcoin Bounce. My name is Joseph, and today we're going to look at Steve from Crypto Crew University, and he is talking about a falling wedge on Bitcoin. I think he's looking on the weekly chart and on the monthly chart. Dion, good morning. Can you just show us what is this falling wedge that Steve from Crypto Crew is talking about? I think he, if I'm not correct, wrong, I think he drew it on the weekly and on the monthly chart.
This is on the weekly. This is the one that we've been following, the descending wedge. Has he got another wedge pattern maybe that he's keeping an eye on?
Yeah. So what he did, he drew the bottom of the wedge as a horizontal line, and then the trend line going down is similar to that red line that you got there.
Okay, he's probably following this massive big something like that we've been struggling to break through. It's probably that line there, something like this, I think.
Yeah, and then a horizontal line there at the bottom. Yeah.
And probably that one there, just that strong support that's been holding there. Yeah, so it is a descending wedge, and they normally always with Bitcoin break to the upside. So, and we haven't lost any support there. So it is really looking good. Price is down low. It's a great time to buy. I don't know, it really looks low. If we do drop down, there are various levels out there on social media. Lots of people say 13, 13.5, 14, 16, but wherever it bounces to, I think there's so many opportunists and big millionaires and big players that are hoping to get an order filled there, that I think price is just going to shoot up if it does ever go lower, if it breaks this trend line here. I really think there's so much support down there that whatever level it hits, it's just going to shoot up from there. I think that would be then the really big turning point. But as we've said, we actually think the bottom is in. Steve thinks it's in. So we don't really expect to break this yellow line. Yeah, I don't think so.
Okay. So Steve also says he's going to stick. He's got a lot of other indicators that tells him that the bottom is in, that the market is going to go up. He also looks on the monthly chart at the RSI that has to cross to the upside, and that hasn't happened yet. And also they're quite far apart, so it has to go for a little bit more. So he reckons the moment we on the monthly chart see the RSI cross to the upside, then that is going to be a very strong signal that we are out of the bear market and we are starting our bull market. So okay, but let's jump in. Let's listen to Steve. This is good to listen to this analysis, because it's going to help you to calm down your emotions a little bit if you're worried about Bitcoin. So let's listen.
Now, let's get to this chart. We've got a lot going on. We've got some price action above. We have two moving averages, which I'll get to a little bit later. We have some critical levels, which I'll get to later. And then in the middle of the chart, we have the ASO, which is basically a sentiment indicator. We'll get to that a little bit more later. And then we have the RSI down at the bottom with some very critical crosses and one that we're hoping for. And we'll get to that later as well. But let's start with the ASO. What I've discovered is that this is one of the most powerful charts for the bears. And they're basically saying, hey, do you see how this red line is on top? That's bearish. However, once it changes direction, once it stops going up and starts going down, that's when the bears will start to believe my case, which is very unpopular opinion, that the bottom is already in. You can see, as we're talking currently, the red line is continuing to rise. Now, I think this is an interesting theory. And if you go back all the way even to 2012, this was rising. And when it started to fall, yes, we started to go up in price. But there's a couple things that I would like to point out with this. First and foremost, when we started to go down in this red line, that wasn't the actual market bottom. It happened pretty far after the market bottom. In fact, one could argue it happened in the middle of the bear market. Now, if we look at 2019, one could argue also that this line started going down in the middle of this bear market. Another thing that I would like to point out, which is even more interesting, when we had this red line actually cross up, something really interesting was going on at that same time. So you can see here this red line crossing above with our sentiment, basically the sentiment having some trouble. You can see we were holding this critical market structure for month after month after month after month after month after month after month. And then we broke above here on the red line. And right at that time, our market structure was a little less than 400. And then once we fell below here, we actually crashed by about 50%. So simply put, right before this red line crossed up, we were holding month after month after month after month at a certain level. And then when the red line crossed up, we crashed by about 50%. And if we fast forward 2019, let's see if we did anything similar to that. Because before this red line crossed up, we were month after month after month after month after month holding this critical market structure of about 6,200. And then what happened? We had this red line cross up and we crashed by about 50% to the T. So it was the same procedure in 2015 as 2019. Holding critical structure, when red line crosses up, we crash by 50%. 2019, holding critical structure, red line crosses up, crash by 50%. One could argue this is more of a case that the bottom is in, because what did we do in 2022? Before the red line crossed up, we were holding this market structure month after month after month after month after month after month after month. The critical structure about 34,000. And then what did we do? Red line crossed up, we crashed by 50%. How is that different than 2019 and 2015? So I would say that I would agree this red line is still rising. I would agree that when it turns down, it's more of a case to go in line with my theory that the bottom is in. We have yet to do that. But I would argue that in order to have the red line cross up at all, you needed to hold critical market structure at a critical base and fall by 50%, which we've done in 2015, we've done in 2019, and we've done precisely that in 2022. But now this is where things get interesting, because this next chart can't really argue against. The next chart is a little bit brutal, which we'll get to in a moment. And the next chart has a projected move downward, which we'll get to in a moment as well. But one other thing I would like to point out, everybody's going to want to know when this turmoil is over. The turmoil is not quite over when we start pointing down in red, because that means we're still about halfway through the bear market and we still have more headaches to come and more stress. Now, when is it over? We can look down to the RSI. When the RSI, which is the green line here, crosses above this red line, that is at the end of the bear market and at the very, very beginning of the fresh new bull market. It happens precisely when we reach this green line and when we also reach this green moving average. They are one and the same. When price action gets above this green line and gets above here, that is precisely the start of the bull run. And if we look at 2019 and we say, okay, when did the RSI get above this red line? Because keep in mind, it was above this red line for the whole bull run and it's below this red line for the whole bear market. When it gets back above, it's usually right at about the time where it gets above this price action as well. And that is the start of the bull run. Where are we now? We're not close. We're not close. I put this yellow circle here as like kind of a hope or a wish that it will be sometime around this time frame, but we still have a lot of time. We still have a very large gap. So what you want to do as we sit here in this bear market and things are getting rough, you want to keep an eye on here. All right. You can pull it up on the monthly chart. You can keep your eye right here. And this is where we would like to look for, but we want this green line to cross above this red line. And we need price action to get above this green line, which is right now at about 40K. So we got a long ways to go, but at least we have our eyes on something. We have a target on something. Now let's get to the next chart. This next chart is nothing to play with. Okay. Right now, Bitcoin is in this formation. Do you know what this formation is? It's been in this formation before, right here. This is a descending triangle, okay? The triangle had created a high, a lower high, a lower high, a lower high, while maintaining its base. That's a descending triangle, and by definition, the high majority of these break to the downside. You should never trade inside of a pattern. You always want to trade on the confirmation of a pattern, not inside of the pattern. But make no mistake, the high majority of these break to the downside because you've got action falling and falling and falling while maintaining the base. It's like a pressure cooker waiting to explode, okay? And the interesting thing is here, we are also in the same formation. But what's more interesting is how to measure these, okay? So basically, what you want to do is you want to go over here, grab this little guy, and you want to go from top to bottom, from the widest point of this formation. And you can take a measured move to predict where the downfall would be if we were to break below, right? So we go here, we grab this little guy, we pivot him up here, we grab him down to the low. So now we've got this base, and now we just pick it up and we drag him over here, and you want to put him at where the break occurred. The break occurred here, and this predicts where the downfall is supposed to be, and it was like to the dollar, literally like to the dollar of where we were supposed to break down. And that's just by taking a simple measured move once the pattern confirms, and the rest is history, right? You can see during this pattern, we go from the bottom to the top, to the bottom, to the top, to the bottom, to the top, to the bottom, to the top, and it's a pressure cooker, and the majority of these break to the downside. So this is something that we will be watching. This is something that the bears are drooling over, because what have we done? We have simply gone from the bottom back to the top, back to the bottom, back to the top, back to the bottom again, with a rejection from the top and back at the bottom. This is not a good sign, okay? So the majority of these break to the downside. We have not broken yet. You should never trade inside of a pattern. Now, has there ever been any descending triangles that break to the upside? Of course. Of course. There's no certainties in charts. The only certainty is that there are no certainties. So nobody on planet Earth knows if this is going to break up, down, backwards, forward, sideways. Nobody knows. But what we do know is we have a lot of evidence to suggest the majority break to the downside. That's just a fact. We can't argue with that. So I would say this is one of the best cases for the bears. And it gets a little more interesting when we take that measured move, because you may be wondering, okay, how about that measured move you talked about? We can measure from here to here, we can pick it up and we can place it here, and it will tell us about where it would break down to. So this is where the bears will probably be dancing in their seat, because, you know, there's a lot of people that are calling for certain prices. We have called for the bottom to be in based on a lot of different facts in the charts. It is not a popular opinion. The high majority of people are completely against us, which is okay. That's kind of our comfort zone. We're usually always in this scenario. When we make a call, usually the high majority of people are completely against us, but it is what it is. You know, I look at this kind of as a sport. I put my blood, sweat, and tears into this sport, and I'll leave it all out in the field. And I'll be happy with myself because I stay true to myself. I cover the charts that I believe in the manner that I believe in them. I never change my opinion based on what other people say. I stay true to myself, and that to me is very important. But let's take this measured move, all right? Because this is where things could get a little bit interesting. If we just take this move from here to here, looking at the widest mouth, and we just pick this up and we drag it over to a hypothetical breakdown area. And again, this is all hypothetical. This has not broken down yet. This pattern is still in play and it has not confirmed, but just taking some hypotheticals here. Let's say hypothetically it breaks down over here around this time period and around this point in the convergence here. Where would it bring us? What would happen? How would this look like? Because the bears are probably drooling, waiting for this to happen. It would bring us to a price of around 11K. All right. That's if we broke down. So this is a point of concern. This is a chart that we will be covering more and more to keep you up to date on what's going on. Let's cover one last chart. One last chart is this chart that we've been watching for a very long time. We have a couple weeks before the end of the month. But at the end of the month, if Bitcoin is not above here, not above this 19.5 or 19.4 and change, we could be in some trouble. Okay. Now, last month we were teetering on the fence, but we still, in a technical sense, this is still as support for this line. This line is not a paper thin line. We have some give and take here, and it comes from here and here, and it comes from also here. So we have a little bit of leeway. This is not a concern from last month, right? We'd maybe closed a few dollars below where this white line is, but in total, it's not a concern. This would be a concern. Make no mistake. Look at this candle, how it is now. This is closing as resistance to what was our support for quite a while. That would be a concern. But let's be very, very clear. This candle has not closed yet. I know there's going to be somebody that watches this and they're like, hey, look at this. We're below. This is it. The downfall is coming. We have not confirmed this candle. This confirms on the final day of the month at 11:59 UTC time. We're not there yet. But this is a point of concern. We need to watch it like a hawk along with this chart, and we will continue to monitor this chart.
Hey, awesome. Thank you. That was a good video. So, Dion, what I like about Steve is he reads the charts and he sticks with his guns. You know, he doesn't flip-flop every time someone changes their minds.
Yes, and he has his fixed trading strategy that he just keeps on following, and he just sticks to the rules. And he trades what's on the chart. He doesn't trade any emotion and anything else. So I like his analysis. Yes.
Hey, awesome. Thank you guys. Thank you, Dion. Have a fantastic weekend. Maybe we're gonna see a little pump of Bitcoin over the weekend. Let's see what happens. Thank you, Dion. See you on Monday.
See you on Monday. Cheers, guys. Enjoy your weekend.